This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about.
Welcome to today's podcast. We're diving into some critical topics that are shaping the financial landscape today. My name is Anil Jagmohan, Senior Investment Analyst at Net Group Investments. Joining me in studio is Rashad Tayob, Portfolio Manager and Head of Fixed Income at Ford Asset Management. Ford managed the Net Group Investments Stable Fund. Rashad, a very warm welcome to you. Thanks for joining us.
Thanks, Anil.
Let's get started with our first question. So, Rashad, I just wanted to pick your brain on the impact of U.S. government spending on asset prices. So, how has it influenced asset prices across different sectors? And would you say there's specific asset classes that have been more affected than others? And kind of what long-term impacts do you see from all this government spending?
Anil, government spending is having a massive impact on the economy. A lot of spending is now baked into the cake. The deficit is running at elevated levels despite unemployment being low and growth being strong. And it feels like the overspending habit that was developed during COVID, where they ran massive deficits, is being very difficult to break. And you're seeing historically in the US, deficits and spending has been a major political issue. You think of the politicians who've railed against big deficits. You think of the debt clock, which is sitting in Times Square. This was a big issue before. But despite the polarization, it feels like where Republicans and Democrats are united is in spending a lot of money and keeping this economy very strong. And that has an impact because as the government's debt levels grow, they basically take on debt from the consumer and the corporate sector. So you've seen a massive increase in the debt levels, and that's put the consumer and the corporates in a better position at the expense of government. And it's no surprise in that situation, you're seeing higher asset prices. You look at where the stock market is, you look at where house prices have gone over the last decade. The stock market's almost trebled. The housing prices have doubled, in the last 7 years. That's a reflection of how a lot of government spending has led to a stimulation of asset prices.
Yeah, that's very interesting. I definitely want to come back to chat a bit more about the US elections as well, please. But I just want to ask you, so where do you think the Fed's funds rate is going to from here? So just, given current economic indicators that you're looking at, what are your predictions for the future direction? How much changes in the Fed funds rate actually impact both the US and global economies? And, what do you think investors should be mindful of in this interest rate environment?
So I think what investors need to be aware of that is we are in a global rate cutting cycle. If you look at the last month, a lot of countries around the world, from Canada, the ECB in Europe, Hungary, Switzerland, a few developing markets as well, have cut rates, albeit by around 25 basis points. So we're at the start of a very moderate cutting cycle. And the Fed, in fact, this week we had both the Bank of England and the Fed have central bank meetings. The Fed decided to stay on hold, but almost guaranteed that they're going to start the cutting cycle in September. The Bank of England cut rates by 25 basis points, but it was very close in a 5-4 vote. So if you look at global rates, they're coming down firstly, very slowly, and there's still a little bit of uncertainty and disagreement in central banks about how aggressively rates should come down. However, we can't deny that we are in a cutting cycle and rates are likely to fall over the next 12 months. I think there will be a hesitation to cut too aggressively, given that we've recently seen high levels of inflation. In the developed world, it's inflation we haven't seen in the last 40 years. So I think in that, given how recent inflation is in the memory, central banks will be very hesitant to cut too aggressively and risk stoking inflation after it's just been defeated.
Thanks, Rashad. And I guess just the third question for today, and our final question, is just about your thoughts on the US elections and the ability of the US economy to grow strongly going forward. I mean, how do you think the upcoming elections are going to impact policies and growth? What do you think are some of the key economic challenges and opportunities in the near future facing the US?
Yeah, given the interesting political developments over the last month, I think we're very likely to see a second Trump term. So he last won the election in 2016, and the circumstances now in 2024 are very different. If you look back then, asset prices were much lower. We talked about that. Deficits were lower. Taxes were lower. Now, Trump is a person who doesn't necessarily want to see things tick along. He really wants the economy to boom under his watch. That's the nature of him. That's how he ran his businesses. That's the type of individual he is. But because the circumstances are different, it's going to be very difficult for him to pump up the economy the way he did the first time around. When he first came into power, the S&P 500 was sitting at around the 2,000 level. It's now almost at 6,000. The median house prices were sitting at around $220,000. It's now $450,000. He already cut tax rates. The corporate tax rate, he cut it from 38% to 25%. How much lower can it go? He's talking about 15%, but that would be amongst the lowest rates of corporate tax anywhere in the world. So he's done a lot in terms of stimulating the economy, spending, reducing taxes, but the effects have already come through. The one area where I expect him to want to put pressure in order to stimulate the economy is the Fed funds rate. So the Fed funds rate is sitting close to 5.5%. Back in 2016, it was 0.5%. So rates are at a much higher level. And we talked about the fact that rates are coming down, albeit moderately. However, once you see those rate cuts come through, maybe around 100 basis points over the next year, I expect Trump to put a lot of pressure on the Fed to cut a bit more aggressively in order to provide stimulus to the economy. And the Fed is nominally independent, but they're not immune to social pressure. So that's the one area I do think he's going to put pressure on in the next year, the pressure on the Fed to cut rates aggressively.
Great. Thanks very much, Rashad. Thank you for sharing your insights on these important topics. It's been a pleasure having you join us today.
Thanks, Anil.
Thanks for listening in. That was Rashad Tayyab, Multi-Council Portfolio Manager of the Net Group Investments Stable Fund. Have a nice day.
Net Group Collective Investments is an authorised collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Net Group Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit netgroupinvestments.co.za. Net Group Investments. See money differently.